Gentlemen in the mix.
Hello, good morning, traders. Welcome to the stream where bank stocks are collapsing. Even the index funds aren't doing very well. They've been dumping too. Not many green candles today, unless you're looking at Shopify, which is up like substantially on earnings. Just starting the stream with PACW here, and we're gonna look at a few of these where it's really bad. All right, so this thing's halted again for like the 8th to 10th time now. I've lost count because it happens so frequently. Just sitting here, waiting for the crash to continue. Well, it's only down 59% today. I know, not really a big deal. All right, so we'll hear the beep soon enough once the trading resumes. Let's go look at MCB. MCB is another regional bank stock that is down 20.5% currently, as at that 1576 support. That's looking left. That's your COVID crash low. Has been formally tested again. Second time in 2 months. And you just hard to believe it's going to hold here. All right, with the Fed raising interest rates 25 basis points yesterday, with there already being so much stress on these banks. Metropolitan Bank Holding Corp, the days are numbered on a lot of these. Let's go look at CMA that was down nearly 20% earlier, $30.50, currently down 13.6%, right at this ice line from 2016. You don't hold that, well, it's probably just going $25 fast. There's just not much here below this level that you're at, and you're trying to break it. So I know this one's been halted a couple times already today. So just setting my alerts back up because they all triggered like 5 times, so they're all gone. All right, let's look at a key here. Key Corp. Remember, it broke the support yesterday, 2 days ago, really, and is just like collapsing. Gapped down, has been selling most of the day, most of the morning, down nearly 9%. Next support on this one, if you're lucky, 750. So I'll have an alert here. So when these continue to draw down later today, we'll know if I'm here still. I don't know how long I'm live. This is history, man. This is like the COVID crash. When's the last time I was going live this early in the morning, during the market being open? And there's reason. It's so warranted. This is like bad, really bad. Great for, if you're allocated properly, it's great, right? But for like what's coming with the central bank digital currencies, this is all according to plan. This is what they're doing. Yeah, full financial control of your lives once they kill all these banks. TFC, Truist Financial Corporation, broke sports a couple days ago. It's continuing the follow through. Lowest price today since March 2020, the COVID crash. I would think that's probably your next target here. What, like $24? Have these alerts set up. PNFP finally hit support. Yep, the support of supports from 2016 has been achieved. Look at that bearish breakdown there. Woo, but nice, interesting limit buys, right? You see, understand inflection points. The limit orders were there. They've been triggered and filled, and a rally ensued off the lows. PNFP off that low by 4.55%. So you just got to wonder, how long will this support last? Being formally tested again for the first time since November of 2020 today, not yesterday, today. Nice little bounce so far. Okay. USB. Ooh, USB, man. Nasty. Currently at a support, like a fruit fly is at a support. It's breaking it. It's currently breaking support. As you can see, this massive, or it's just like a massive price spread, like from the lows to the highs today. The swing, wow, a 9% swing, went up to fill the gap before rolling over again. Look at you now, bro. You know what's below this? 28.50. There's not much, man. There's really just not much support until like maybe 1781. And this week we're lucky. Bro, this is insane. Let's look. Inflection. I don't know. There's a little support at like $20 too. Psychological. So maybe that's on deck. Sorry, man. It's kind of early for me. So don't be like, don't judge, man. Don't judge. I'm here. Don't kill the messenger. I'm just here to look at these. Since I'm sure there are people out there looking at this stuff too. But, you know, I mean, we've been talking about this stuff. And it's like, I'd be remiss if like the day that the things are happening, again, I'm not here to be able to really look at this. You know, yesterday it was gloomy and ominous, and see the thunderclouds rolling in last week, and here they are. The storm is like ongoing. We are in the middle of the quasi-linear storm front, right? Straight line winds, tornadoes. A gap has been filled on NBHC, National Bank Holdings Corporation. The gap from October 5th, 2020. It's been tested and for now holding as support. But that's a Rudy Poo support. $24, 21.88 incoming. So let's continue down this. This is the bank stock crash stream, dude. What do you want? Okay, all right. We'll go to Bitcoin to satiate your religious need to see it. Here it is. Now you can breathe. As the banks collapse, Bitcoin doesn't care. Bitcoin just hanging out. I don't know. It's kind of being affected maybe by the S&P selling off some. It's currently above 28,800, barely. Like, remember yesterday you broke that level, you broke back above it, and now you're attempting to formally back test it as support again. I hope it holds, man. This just makes more sense than anything in the world to me. Fundamentally. Technically, it's not like an actionable, great, strategic, value area. It's been running and pulling back. It's even run again, and now it's up against an inflection point. That's not like, an inherently low risk area, great long opportunity for the swing trader. But it's actually different fundamentally, right? Because this is exactly why Bitcoin was invented, for what's happening right now, and adding insult to injury, what they're going to do after they finish this process of wiping out regional banks. It's a methodical process that's been well thought out and figured out behind closed doors. And everyone's out there going to Miley Cyrus concerts, talking about what gender they are, and all these things are happening. And really the majority of the population doesn't even know what's happening right now. But here I am early, streaming because this stuff, it is happening. Okay. So that's your crypto. Like, okay, cool. Let's go to gold. How's gold doing? Very well. Kind of in the same boat as it was in on the stream last night. Hasn't moved much. Pulled back, and at one point, gold last night was at 2,030, so it's rallying again. And all-time highs on the XAU is $2,075 and change. You're on your way. I can't be surprised if it happens within the next few days, right? Or at least today or tomorrow, and then the market closes, then Monday rolls around, and you gotta wonder: are we? Turnaround Tuesday is a long way away still. And I've at this point, banks are currently Apollo Creed, and you've got Apollo Creed's trainer saying, "Throw the dang towel." He's screaming it at the top of his lungs right now. Apollo Creed, the banking sector's about to be twitching. You know what I'm talking about. It's about he's about to be twitching on the boxing mat. Okay, and there's going to be absolute pandemonium. Someone give me that sound clip. Zachary, throw the dang towel, please. We're going to spam it on the soundboard. That'd be great. My God. Okay, so let's so the beeps have subsided a little bit. Gold, silver, you get it. Like the commodities. I'm not spending too much time on them. Let's go to the SPX, where, man, it's not over quite yet, but hey, 4,058, here we are. And you gap down, so that gap would fill.
Any thoughts on how a regional banking collapse could affect other sectors of the market?
Yeah, it's happening. It's definitely like starting, like the rest of it seems like the macro is beginning to respond. Like it's just been disregarding it now because tech and all that earnings are coming out. And hey, one time, shame on you. Second time, shame on me, right? Confirmation high here. If this doesn't hold, this is it. This is the inflection point. This is it. May of 2021, you're at it. You don't hold it. I mean, someone tell me what you think the next real support is. I mean, minimum 3,800 target if this doesn't hold. That's it. So I would think that it will have an effect. Like it didn't at first, and I believe it would, especially like, okay, one bank, okay, two banks, whoa, three banks, whoa, three banks in like 6 weeks to 2 months, and then two of those banks are, a couple of the largest banks ever, and the three banks that are bankrupt are like, the losses are as large. They rival 25 different banks collapsing in 2008. So it will have a profound effect eventually. I think. I just don't know how not. I mean, it would be, hey, we've been in a bear market rally for since October. What would catalyze? We need a catalyst to continue the downtrend. I think this would be it. This would be a perfect catalyst, right? Regional banking crash. And it's like, it's the whole XLF too. It's not just the regionals. I mean, just because the mega banks aren't getting as affected, they're still getting wrecked. Dow Jones, thanks for the $4.99. I'll let it slide, man. I'll let the penny slide this time, okay? Yeah, there's just more interesting things in crypto right now, and that's why I'm here. So, Dow Jones, remember, we've identified the classic distribution. It's finally started to play out. Really good here, really good. Okay, and I say not good because price go down, but good because pattern recognition, right? TA, lower highs, 886 retraces, local confirmation highs, right? That's good because that's like what TA is for, to help us maybe identify something that would be, where would the probability be? Oh, the probability be down next, right? And we're now breaking the lower end of the inflection zone as support today, down about 1%. So it's not really bad, real bad. But this is it, man. This is the beginning. This is what it looks like. You could go to Google and you can go anywhere, man. Go to a friggin' textbook and type in 3 falling peaks, and you try to tell me it's not this. I mean, right now, it's got all the makings. Don't even need those trend lines anymore. I mean, we could, but this is it. This is what's going on. So your next target is 32,600 for now, December of last year. It's probably where you're going. 200-day moving average down there. All right. Excuse me. All discombobulated right now. All right. Here's the Nasdaq Composite sitting at that 11,935.
How to prop it up till CBDC auto distribution of UBIs. Historic times here, all that will tell the kids. Wrecked.
Thank you, Andrew. Yeah. Yep. Yeah, AI and automation, and then they're just not going to be job. I mean, all the jobs are going to be gone, man. And what we're going to do with all these people? We already have one wipeout, right? Where we outsourced all our manufacturing jobs to China. The World Trade Organization, they joined in 2001, and you can see how a steady decline in the United States, like workforce. And then now with AI coming out, it's going to be another purge, another big loss of jobs. But now it's like blue collar got wrecked, and now white collar is going to be a big culprit or a big victim of AI. So it's a paradigm shift that is going to occur from this. So it's really bad, the fact that the whole banking sector is beginning to collapse. Money's debt is not cheap anymore. Market conditions are contracting and tightening. Recession's coming, and just on top of all that, you have this revolutionary technology being unveiled. That's a terrible combination, I think. The variables right there. I gotta wonder how that's gonna play out in the coming years. Okay, so good luck, Nasdaq Composite, hanging on by a thread, 11,935. If you don't hold it, see you down at 10,800 in time. One high, the second high, and the Nasdaq 100, the QQQ. You know all about that, don't you? What the? Oh yeah.
Technology. What is that all about? Is it good? Or is it whack?
Bro, this is a beautiful rising wedge. Beautiful rising wedge pattern. Kind of just had like an epiphany last night or yesterday on stream. Like it was right angle. It still is a right angle ascending routing formation, because you have like a base of buying that's horizontal. But looking at it like this with the lows, that is upsloping price contraction. That is a massive bearish reversal. Okay. And you're getting so close to the apex, the resolution's coming. And what you got to love about this rising wedge is from this high to low, you're at these deep retraces. I mean, you made an 87% retrace, perfect in a downtrend. Low risk for shorts. Low risk for people going short. When you're in a downtrend, there's a bearish pattern, and there's a big, deep retrace. Not to mention some very nice buyer exhaustion on the oscillators. I mean, there's a good combination of variables here. There's a good argument for downside here. Even if it goes up, it seems maybe more probable based on the variables that we would go down next, not up, but we'll see, I guess. But that right there, man, this should be in a textbook, like for real. That right there is gorgeous. Like, flip this chart over, and you can't tell me, 886, falling wedge, bullish divergence, that you wouldn't be a little tickled that this might have a higher probability of rallying, and the prevailing trend was up, right? Yeah, you got everything behind you for sure. The bears, the sellers, a good spot for them. Anyway, so go to the IWM. No offense to bulls, but that's how it, and here it is, right? Smelled a rat with a confirmation of distribution until you were taking those levels out. Only bearish. Completely reversed. And here we are, below the 2018 peak and the pre-COVID crash high. Here it is. Support's broken, chat. Bear market pretty much reconfirmed. I mean, in my opinion, like that's it, dude. That's the line in the sand. You should, if I could find it, I don't know how to make it happen on TradingView. I wish I could show y'all. It's fascinating. The Russell 2000. There's like Russell 3000, but then there's the Russell bottom 1000. If you had a chart for the bottom 1000 of the Russell 2000, Russell 3000, it's like crashing. It's legit like crashing right now. It is so much worse than the Russell 2000. So I think the top 1,000, the Russell 2000s, making this chart look a little more peachy than it is. But under the hood, man, it's terrible. And that's good, because 2018, 2019, about 33% of all assets on the Russell 2000 did not make money. And now that number has gone up, like, late last year, like this year, it's about 40% of assets on the Russell 2000 do not make money at all. So lots of zombie companies involved in the IWM. So if this thing goes way lower, you know why, right? There's actually a reason. And we're talking about if you're in a recession, bad markets, bearish market, the last asset you would ever, going long is, risky in bear trends, but like to be trying to long an asset that certainly doesn't make money, the only reason it exists is because of the cheap debt environment we had been in for a long time after the global financial crisis. So good luck, IWM. Good luck. These are like, these are all American companies. You have to be like a US based company to be in the IWM. And then there are going to be like, I think Amazon's in the Russell 2000. So that's just like, propping things up a little bit. And Amazon's not even doing well, man. Like, oh God, Amazon's garbage. Let's look at it. I think this is, it's still above the support though. So it might hang on here, but 102, 101, 180, that's the line in the sand, certainly, okay? Hard for me to trust an asset that's in a long-established downtrend that has not made a higher high and cannot break the 200-day moving average and is making an 88% retrace from this previous February high to low. I mean, that's just, it's not there yet. It's just not bullish, and this is actually exactly where major reversals of the downside for the bearish continuation, that's where it could occur. So, so if we want to get off Depression Island with all the drawdowns, we can go to Shopify and just look at it because they killed it on earnings, man. Mother of God. Holy crap, dude. Up 30% at session highs right now, too. Beautiful rally here. And approaching a measured move of 62.27. How about that, man? Let's get some hype in the chat. For Shopify, man. Classic accumulation, held support, was just meandering on and like lucking out on earnings because it could have just as easily gapped down below supports, below stop losses, and you're gone. You were screwed, royally screwed. But it went the other way. The coin landed on tails. Tails never fails. You're currently sitting at that high from February of 2020 right now. That's it. That's where you're at. How about that? Magnificent. Okay, I'll add an alert on that. But, again, I mean, I'm here in the morning because banks are failing. Regional banks have been failing. I think they kind of figured it out a little bit. Let's go back to PACW, the centerpiece of the stream today that has rallied substantially off the lows. Yeah, that's a lot. That's a huge rally off the lows. Let's see. Yeah, up 26% off its lows today. Yeah, I just can't imagine what people are doing, like playing this down here. What are you doing?
Bank stocks crashing? But yesterday Papa Powell told us banks were strong. Let the 12-month 20-fold interest rate hike cycle clown shoe continue.
What's up, Paulie? Volker, thanks for the 420, man.
Is that a joke?
Jay Powell wants to be him. He's trying. Yeah, so we could continue to look at some of these. All right, and I believe right now PACW is halted, certainly. It's been halted 10 times today, minimum. Yeah, these banks. All right, let's continue here, all right? So we got Wells Fargo here sitting at a key support back from June of last year. Where it goes further back, does it? It does. This is a serious level. 2006 peak. This is the line in the sand. Below this is death. Below this is like $23 on Wells Fargo. Well, the trend's your friend. Bearish for sure. So our buyers going to defend this chat, this $37 level. This was the measured move of the rising wedge, by the way. Think it's going to hold? Because if not, minimum 8.5% downside, but then like 38% downside on Wells Fargo after that. I'll have an alert set up. I had alerts on a lot of these, and they just got triggered. So here's Regions Financial. Just made its lowest price, today since that March 13th, and just hanging out down 2.3%. This is ugly though, below the support. I mean, $13 and then way lower after that. Shoot, like $9 after that. So yeah, Sophie, that got just obliterated yesterday, and it's really the day before and the day before that. Just is falling below that May ice line, May 11th. Currently broken down. So I guess target 428 from here. Here's CFR. Wow, what a freaking bear flag, huh? Broke it yesterday, and then more fall through today. Lowest price you've seen on this one since February 2021. Long way down. No support on this one until $82. So from where you are now, more downside percentage. Wow, about 14% more downside here. Oh my God, man. Okay, here's Charles Schwab, that we knew below 5150, death, pain, awful. Below 5150 was 26.4% downside. You're on your way, man. You're on your way. It's only down 2.6% today, but it's a mega bank. So yeah, it's not part of the regional banking crisis, but mega banks not doing well. I think it's the whole sector. It's just going to get wrecked, even if they consolidate and they pick up a higher client base, or they get more depositors because all the regionals collapse. Still, it's not good for the sector at all. So way lower. AX gap down 2.3%, but look at this. This is a right angled ascending broadening formation, and it's perfect. Okay. And if we see, if the price on AX goes back down to 34.34, it will be a confirmed partial rise. Okay, if AX sees the horizontal line again, there's a 70% probability of a bearish breakdown. It hasn't happened yet, so it's only potential right now. But my God, if you see 34.30, that's it. So we'll have an alert set up right around there.
Chris in Miami tipped $25. Can we take a look at AG? Took a long 2 days ago at $6.93. Thanks.
Hey, Chris, man. Yeah, we'll certainly look at that, okay? Majestic Silver Corporation. Let's go, dude. We will look. All right, so just know how screwed you are, okay? There's not really any real formal support, I think. I mean, the big support's 1340. And the stage is set. This is like the hex chart before it went down 60% in like 2 days. That's what it looks like. I mean, the 200-day moving average is now resistance. Good luck, Access. All right, I'm telling you, right? It was like, gosh, I can't even remember which one it was that I used to look at on Hex. Which one did I used to look at? I don't even think you can find it anymore. I don't know. Just want to show you which chart I'm talking about. I'm talking about this right here. This was the pattern. This doesn't have much data, but this was certainly what I'm talking about. Structural development. This is the dream, okay? The right-angled, ascending, broadening formation. Right? This, you see this picture? on Pam Beasley, it's the same picture. Okay? Bearish continuation pattern.
Gentlemen.
Just hasn't played out yet. But looking left, you would see how it could very well play out. Let's go to UBS. Let's go. Hype in the effing chat. We have a confirmed bearish dragon. Or it'd be like, we have a confirmed bearish dragon. Did that work? God, I hope that worked. It had to have worked, right? That was good. Nice. So, yeah, we have, it's the dragon. It's the dragon. All right, so this was a great potential trade for a short based on everything. An asset that hits a historical inflection point, right? An ice line. And then locally, doesn't just fail to break it once, but then goes and fails twice. And on the second failure, it's a slightly lower high, which is a subtle indication of distribution. Less market participants than before. Shh. And on the second high, in fact, bearish divergence, hidden bearish divergence with it seems like a evening star, and it ended up becoming an abandoned baby. Man, we're starting to get a lot of abandoned baby reversals going on. But you would think there's a lot more downside. If you're just looking like history, probably I think 1055 is a great low point of a range here, right? And could just make a high or low here, but it's a bad sector to be looking for higher lows and longs, right? It's because people can't afford babies anymore, so there's, oh my God. Maybe so. Maybe that's inflation and no more, AMC to moonshot on, right? And, they have Pepe coin, right? Deutsche Bank. Here's the Deutsche Bank, man. Yeah, I'm sure this will be just fine, right? Gonna go back down to 767 eventually. I can't believe it's holding up like it is. What? Something's going on. Trying to fall back below that 200-day moving average today. So not really as miserable as some of the other ones, but it's also not a regional bank. We're looking just at an aggregate. This is Bank of America, also Mega, but you can see the Mega also just they're struggling and been dumping. And I think your target's $25 on Bank of America here, clearly. So some more downside in store. Man, I'd go all day on this. But JP Morgan, I thought, dude, we were gonna be kings. Gap fill at 129, so a little bit more downside. And of course, you could pivot and rally, but man, I'm telling you, the sector is just not the sector that is bullish. So even like the biggest bank in the world that's going to control half the deposits, still terrible looking chart, still very bearish. And this is bearish indicator going on with hidden bearish divergence. Yep. Man, all right. So that should have serious consequence. Like, we're identifying one of the most, if it actually catches fall there, this is like one of the most reliable indicators you could imagine. Hidden bearish divergence with a formal up thrust back test from a major inflection point from 2019. That is like screaming confirmation of more downside. But we will see. It's JP Diamond. I don't know though. He's got a court case, right? He's getting deposed about Epstein. So, should I even said that word? What? I'm already shadow banned, so it's not they can shadow ban me. It's over, dude. Here's Morgan Stanley. You don't think this is screwed? This is royally screwed, chat. This is bearish, a long established bearish consolidation and a new trend, I think. This is that's a nice deep retrace. $100 was psychological resistance too. So now you're below the 200-day moving average. Now you're making a lower high. But all these highs are lower than this high. But then when that happens, where locally you start making lower highs, then you really start understanding what's happening here. Bear market rallies can last 100, 200 days. And you're making higher highs, higher lows in these like midterm uptrends. But when you understand that, and then those local higher highs, higher lows conclude, and then all of a sudden you start making lower highs locally, that's telling you something. Really, so you could see, oh, maybe it's a head and shoulders here. It definitely looks like it's not perfect by any means, but I'll take a lower high right shoulder all day over a higher high right shoulder, because that to me confirms like strength in the perceived structure. Okay, because like the psychology, what does it mean, right? If I'm trying to identify a momentum shifting structure here, and I think you just broke the neckline, right? That was it. The lower right shoulder than the left shoulder just means that the buyers attempted to go rival the left shoulder. Like traditionally, that's the way these patterns look, right? Like symmetrical left shoulder, right shoulder. But there was such a lack of demand and or too much supply that they could not even rally it to 93.49, which is also a support resistance. That's telling you something, man. If an asset rallies and you just can't hit that next resistance, you knew it was, that shows super weakness for the buyers. And so they're already relenting like this. So now you can tell that maybe the bears have reestablished control of this otherwise already established downtrend, which began in February of last year. Okay, that's the thesis. That's the psychology behind that lower high right shoulder. Let us see if it performs well. It should, right? If we're identifying the trend properly, it's a long-term downtrend now, short-term, mid-term uptrend that is concluding. The sellers that already controlled the market are reassuming control. And so if that's the case, we should be seeing much lower prices. I wouldn't be surprised falling back below that 200 moving average. Okay, so does that make sense? Does that, you understand here? All right, let's go Morgan Stanley Connect. Emphasis on the connects, man. Bro, I'm about to get another coffee, man. This early stream stuff is... There's something about, what is it that Ryan said on The Office? There's something about being sober, but to me it's like, something about being sober that makes you, makes the morning air make me kind of sick, dude. Anyway, I'm just kidding. But tremendous weakness on BMO, the Bank of Montreal. Oh yeah, this one's gonna be fine, man. Oh, Canadian banks are cool, dude, right? Nah, this thing's about to lose its soul. All right, it's about to get Mortal Kombated. Finish him. All right, 84.75. You get the Mortal Kombat finish him move, right? Where like something really bad happens to the bank. Okay, now you go down to $78 immediately. So just have your alert set up on Bank of Montreal. It's good. It's got 7% downside. Okay, so I just have an alert set up here. 84.18. You set yours up. We have a synchronized celebration together. Okay. ING. Oh my God, dude, we're just looking at bank. This is a bank stream. Welcome to Bank Live, Banks Live, not Bitcoin Live. Okay, get over it. Because there's opportunity. There was opportunity to make money on them. You could have made tremendous money. There were a lot of bearish opportunities, and it's just like if you flipped the chart over, like we were in a bull market, it would have been bullish opportunities. Wow, look at that. You're in a downtrend. You just ran up and concluded some sort of 886, almost 886 W shape, and it's a lower high. And now locally, you're making another lower high. That's so bad, dude. That's such bearish price action. I mean, heading on back down to 938 on this one, and then after that would probably you'd say like 680. Some ugly stuff, man. Really, really ugly stuff. This one's been sideways for 84 years now. Never really, it never recovered from the global financial crisis ever. PNC, the one was pretty brutal looking, gap down. It's fine though. It's not really. It's fine like a fruit fly, where it's not continuing to capitulate after it gapped down. It's been rallying today, most of the day. It's near its highs. Probably going to go fill that gap where the gap started at 116.69. The problem with that is 116.42, chat, is a support, an old support. Remember, we were looking at this yesterday, and falling below this, that you understand the downside potential. Minimum 108.70, 108.60, and then 100 after that. So what was once a support could very well start becoming a resistance here on the gap fill. You're testing it right now. Buyers have pushed the price to say, hey, is this a support or resistance now? Well, certainly at this current time, it's being regarded as resistance when it just yesterday and all these other times before was support. It's been resistance before. It was resistance in September 2020 before it broke it to the upside, right? So ugly stuff, man. You got to love it though. You got to love price action like this. This is so educational. Okay, think about it. Before the crash, but these things have been taught. I mean, I'm sorry that you're coming in now and you weren't here when they were doing all these things before, but this is beautiful educational price action. A trend reverses and then a confirmation high, right, in August, confirming distribution, and then the drawdown, and then a base of buying got was put in. 146 to 150, rallies ensued off of that, and oh man, we're breaking back above the key inflection points. Oh, are we okay? But then all of a sudden another lower high comes in, the previous highs before it sell off. More bids come in, and then another lower high than this high, and these two highs are lower than these highs, and that's telling you the story of what's happening. People are quietly, subtly offloading their position as to not create too much of a panic, and one high and then a second high and then even a third high. You see how long it lasted, and I can imagine people got trapped because of just how long this bearish consolidation occurred. And it was like descending triangle behavior, but really, I mean, you don't even have to look at it like a descending triangle. I just look at it like, oh, I can see the lower highs, I can see less market participants involved, and unfortunately. And I'm praying for Apple, man. I want them to just go to 180 after hours, right? I hope it just... Dude, you just have to understand, I'm not like someone who's like so happy and excited about bearish stuff happening, okay? I want everyone to be rich. I want everyone's 401ks and Roth IRAs to do well. But I'm not going to be delusional. And I'm not going to be like, oh, well, because I want those things to happen, I can't look at charts objectively, So anyway, with that being said, you've got Apple, that subtle distribution I'm talking about, where all it's been doing is lower highs, but they're deep 886s. So it's like when assets get to these 886s, I think that's like an 886 retrace is like a retail trap, man. It's like, because retail has no idea about 886 retraces and what it signifies, what it represents on a chart. So right around that time, how many days go by and retail is just like sitting on the sidelines, and then all of a sudden 120 days in, they're starting to hear about Apple's nearing its highs from August. It's like breaking a supply line, maybe. They see it and they're, oh my God. And they don't know or care about buyer exhaustion on the oscillators, right? They don't care about rising wedges. They don't care about 886s, lower highs, slightly lower lows. They don't care about that. So that's when about the time they start getting in, they start buying, and that is the perfect level for smart money to have enough exit liquidity to draw the price down again, and history repeats itself. So that's what I'm saying. I hope just like gravity is defied on Apple, but let's just say TA gets thrown out during earnings reports all the time. But I'm just saying Shopify. Shopify's earnings catalyzed TA being respected in a way, right? Because it was like a bullish accumulation structure, back test of resistance as support. Okay, and then the earnings were good, and then a massive gap up in a rally that is almost concluding part one of the trade setup. But okay, so if the TA was respected in that way on Apple today, there would be a massive drawdown. You see what I'm saying? Right? Like, because, and again, earnings will kill your whole argument with a gap up. But I'm just saying, right? There was an argument on Shopify for upside, right? It's a trade set up for Patreon and Citadel members. You just never know with earnings, and anything above $40 was safe. But as I was talking about earlier, it could have just as easily gapped down and run your stops and been way lower. You know, that's the problem with earnings. But this time, it ushered in the TA being respected. And this is what I'm just trying to sell on Apple. There are multiple variables that would imply that the next thing that would happen on Apple would be this. And so if earnings respects TA like Shopify did, it would gap down and it would be bad and it would kill the market. The whole S&P, QQQ, all of it would just start getting destroyed. That 4,058 would not hold and we'd be going way lower. Okay. So, I'm not saying, I mean, playing earnings is legit casino. Okay. It is a casino of casinos. So if we were in a utopian society, Apple, doesn't matter what happens on the earnings, they sell after hours and we dump from here. Okay. But I just said, right? It doesn't mean it's certain, not even close. Are we cool? Do y'all understand what I'm talking about here? Does that make sense? Sorry, I've been really looking at chat because, yeah. All right, Chaylin, thank you, dude. Wait, Chaylin, can you just make it say, throw the dang towel? Yeah, the last part. There was just like 1 second. All right, thank you, dude. All right, sweet. Can y'all hear that? Yeah, I'm sure. Like, dude, again, Max saying they're gonna beat earnings. Yes, earnings, because estimates have gone down. Did you remember 2022? These analysts had an entire year to change their estimates on earnings because of poor performance, how bad things were last year. Okay, so that's why a lot of assets are beating earnings, but their revenues compared to the previous quarters are way down, man. Amazon having one of its worst quarters in a very, very long time. But the earnings, like you can make an asset and like an asset beat on earnings, but the reality is such a different picture, and that's for stupid retail. Oh my God, they beat on earnings, but like look under the hood, man. Look what's really going on. That's just, it's almost like these companies can do like what the Fed's doing with like inflation numbers, right? They change the metric in which they gauge inflation. The same thing with earnings. They can do that. So Joshua, good morning. Yeah, man. Super early stream for me. Very rare, but it was definitely warranted. Okay, so y'all can hear that, right? Y'all can hear the throw the dang towel. Okay. See if I can do this real quick. Should be able to. A little quiet. It's quiet. Let's see if Jalen, hopefully you don't have to redo it. Let me see. I'm gonna max this out on my side on the stream deck. Excuse me. Let's see what happens. I'm gonna play this, okay? Was that louder? Louder? Yeah, it sounded a lot louder on my side. So perfect volume. Okay, Jalen, you're good. You don't have to do anything else. You're good. Do I have an espresso machine? Not like I have a Mila, right? The model. I'll give you the model number of my Mila. But it makes incredible espressos. Yeah. I have the Mila CM6360 Milk Perfection. That's what I have. And it makes, yeah, wonderful coffee. I'm about to get another one, I think. That's my thing, dude. So just currently, I mean, Apple's just above the supply line and kind of holding it. It's still inside the wedge. Went to test the bottom. That's a gnarly wedge, though, man. It's crazy. It's like I feel like I'm losing it, you know, a little bit here, where it's got all the makings of a bearish Vosity athlete, where if it wasn't Apple, it was any other chart in the world, and I didn't know, like Warren Buffett and Charlie Munger were just obsessed with this thing and treated it like God, and there wasn't earnings today, I would just be like, all day, the next outcome is down, not up. But again, it's Apple. It's the market driver. It is the market, okay? Because whatever this asset does, everything's going with it. So they might try to gap it up, and it goes. And then the GUG guy, right? You got another. No, there aren't many more GUG guys, right? Because there's no more like cheap debt. The market conditions are just not good or conducive to create moon boys or, you know, really dumb new money, right? Like people that like would be getting in on the AMC, GameStop crap. They don't exist in this market, man. They've been wiped out. The bear market's been going on way too long. So that is not a market they want to participate in. They don't. They go back to doing whatever they're doing, man. I don't know, making TikToks of trans people, all that stuff, right? They're doing other distracting things. So they're not trading meme stocks. They're not, you know, buying puts on Apple to win the lottery and hope to God it goes up. All right. Let's go to Google. That's Goggle. Sorry, this is Goggle, not Google. This is the poor man's Google. This is Goggle. Golden Ocean Group Limited Marine Shipping is oh my God. While we're here, let's just look at it. Oh my God. Someone want to look at this chart and tell me how effing effed it is? We were looking at a marine shipping company yesterday, and this thing is like so ruined. Chad, you see this? The downside potential on Goggle? Dude, it's almost like Cal Maine Foods, how almost perfect it is. Jesus. The level, right? It's like a head and shoulders, but the right shoulder's lower than the left shoulder. And what does that signify? Like strength of the weakness, I guess, of the buyers, but the strength of the bearish setup here. And you've got this neckline. And once that neckline breaks, bye-bye Goggle. See you at 262. Mother God, dude, this is crazy here. This is crazy. All right, so it's like, here's the left shoulder, the right shoulder, and then the super telling right shoulder. But the right shoulder is perfect because it's the formal bearish back test of what was once resistance in 2017 and 18 is now resistance again. And it's not once, but it's twice. So you've got like a local confirmation that what that level once was is again. And you're below the 200-day simple moving average, rejecting it so gently. And that's it, man. The 200, look at the angle of the 200 moving average. This is like death, man. Like, wow. The downside potential on GOGL is nothing short of insane. 66% downside if you break the neckline here. The if. Oh my God. That is beautiful. As you know, all the goggle holders out there would watch this and they would say, I'll just ping people into Citadel for that. That's just unreal, man. Crazy. Let's see how it plays out. Have your alert set up on GOGL. When we see that neckline at 763, you hear the beep. You'll know. You'll know, man. Let me check my notes here. Hey, be sure to join the Discord if you haven't, okay? Discord is pinned above, but it's like, you know, it's, sorry, my music set ended. Get another one going. So, like, you want to go to the Discord because they're educational resources. So if you're wanting to learn and get your feet wet in the world of traditional technical analysis, that I didn't make this stuff up. This is stuff I've been studying for 13 years. Okay. And all I'm trying to do, and the way I learned, I had to find all these fragmented pieces of data, information everywhere. And now I've all brought it together, condensed it to where you get like, you know, it's like the most efficient way, right? The most, like, you know, you're not going to be learning about stuff that really doesn't apply or matter or whatever. So you go in the Discord for the educational resources. You go to the Discord because you get notified when I go live. YouTube will fail to notify you when I'm live, and you're connected to a community of like-minded individuals that care and honor traditional technical analysis. That is the centerpiece of the community. It is the heart and soul of this community, and we honor the people that put their life's work and research into identifying, studying, researching patterns and just everything about the world, right? Wyckoff, 1920s, man, still applies today. It's beautiful. Hey, Stewarty, I see you in there, man. Just about 10 minutes ago. Thank you so much for re-upping your Citadel membership. So Jesus Chimes for Stewarty 21. As well as NBF. Thank you so much for last night renewing for your 3rd month. And yeah, thank y'all, both of y'all, for that. Really appreciate it. 100% crowdsourced stream. No sponsorships. No affiliate marketing. No advertisements. Playing copyright music for you right now, so you so it enhances the quality of the stream, good vibes, and no ads on top. So it's like doubly good. And like when I don't accept a sponsorship ever in a over 5-year period, that preserves the certain integrity I have where you know I'm not compromised, I'm not bought and paid for, I'm not ever going to push any bullcrap on you, and I'm going to tell you how it is. So that's why it's, you know, on you. It's crowdsourced community. Goggle hype, yeah, right, Judong, it's just terrible. Okay, let's move on. Let's go to Google. As I was going before, I was rudely interrupted by misspelling Google and going to Goggle. Oh man, like, come on, Google, what are you doing, dude? This is what it's saying. It's like, yeah, of course it could continue to ascend, but this is just stalling, man. And if Apple earnings are bad, it's done. It's confirming a top. It's confirming distribution. Well, it's not even really distribution because they're the same highs here, and they are higher than the previous high. But what we were just talking about earlier, where assets and long-established downtrends show accumulation all the time. Accumulation. What is a bear flag? That's a form of accumulation. But just because that happens doesn't mean the trend's reversing. There's so many things that have to happen, and one of those things is a previous discernible major swing high from August must be recaptured, and the price must blow past that, and then eventually back tested, and you're not even close. You're rivaling the high from early February, and you can't break it. Stalling out and bearish divergence on the RSI. I mean, and you've already, the thing that's happened, the high to low, right? You've already achieved the golden zone. It's happened. So if market conditions are moderately bearish or pretty freaking bearish, an asset would retrace 38% of the way, and that's exactly where it would reverse to continue its downtrend. You know, you go to the 618, it's maybe not as bearish, but it's still a bearish trend. Even if it rivals the previous highs, it's still like, that just means the market conditions aren't quite as bearish. If an asset reverses at the 236, oh my God, that is hyper bearish. Hold on, what was that? Hey, Simi.G, thank you so much for the 1337 contribution, the Neo Matrix in the chart. Thank you. Oh, WAL was halted again, less than a minute trading. Yeah, another bank stock. I can't remember if we looked at it or not. I don't think so. Yeah, down 35.75% today. They're also exploring strategic options to maybe be purchased, but I imagine that there wouldn't be many bids, and it would eventually, you'd think this would go to as close to $5 and then get seized by the FDIC and then sold for pennies on the dollar to a major bank. So that thing's probably the outcome of WAL. It's just rivaling the lows from early March, and $4.14, $7 is a target, and now that was the target. It's like, oh, that's where you'll revisit that level, and you're very close, but you're halted right now, like, because the volatility, right? Why does an individual asset on the stock market halt? The rule is 10% swings in a 5-minute window. That's what happens, and it'd be up and down, and these things are going up and down 10% like it was nothing. Hidden bearish divergence, of course. One high, second high, lower highs than previous high. Yeah, it's wrecked. Tupperware at all-time lows. Dang it, man. I thought Tupperware was going to change the world, man. What am I going to do? Where am I going to put my Beanie Babies if I can't put them in Tupperware? Yeah, when banning of shorts? Great question, because that's what they actually did in 2008. And if this continues, the thing is, though, this time you know what's happening. They're doing this on purpose. 2008 wasn't really maybe completely on purpose. The Fed and then the administration that is installed, right? They're not actually elected going on that are destroying the country from within, because they're most likely completely compromised by communist China and outside, the Klaus Schwab, World Economic Forum. Those are the people that right now have complete control of the United States government. So in turn, they are pressuring the Fed. But, so the Fed's policy with what it's doing is creating what we've got going on now. So they're killing the banks, the regional banks, so they can... Right, when they're consolidating depositors' money, so you go from 14,000 banks in the 1980s, and then you now have 4,000 banks, and soon with the purge you'll have even less, and that's where they're going, right? So everyone's corralled in to the big banks that are FDIC insured and too big to fail because they're already nationalized, whatever, and then that's just one step closer to nationalization of the banking sector, which is extremely scary because that is not at all a Western value. That's crazy, man. So that's where we are now. So this is a controlled demolition of the regional banking sector for reasons of nefarious intent. Okay, please do not listen to these people that all these conspiracy theories, quote unquote, they all played out, every single effing one of them, and they're continuing to play out. So why would you ever listen to the side of the legacy activist media now? You wouldn't. You're out of your effing mind. You're so indoctrinated. But that's the thing. Yuri Bezmenov talked about it. There are people that are so indoctrinated that you could show them data, information, videotape evidence, all these things, and they still would never change their opinion. And that's where we are. That's what happens when you have, Marxism that completely compromised the institutions of America, where you have education systems, Hollywood, and media. And now they've waged war on the military and police, right? 2020, that one movement that, all cops are bad. And so that has demoralized police officers, right? And so now you have lawlessness going on. And on top of the lawlessness, you then have Soros-funded DAs that are all over the country. So when people try to defend themselves, what happens? The DA prosecutes the person trying to defend themselves, and then they release the prisoners, and that's called anarcho-tyranny. That's going on. So we have just a bunch of things happening, okay? And we're watching the cause and effect of it, okay? And just going on. It's just all connected. Open borders, fentanyl, drug crisis, right? 100,000 people, overdosing in America from fentanyl. And how do you think that where's the fentanyl coming from? How is it so easily and efficiently getting across our borders? These are questions, man, that you should be asking. And communist China and the cartels. Oh, really? Yeah. There's no other way. Anyway, all right. So let's move on. Goldman Sachs, that was terrible. It was terrible. It was beautiful, technically beautiful. If you don't care about up or down, because the formal bearish back test after breaking it. The bear market rally, what was once resistance is now confirmed resistance again. Rejecting it, falling below the 200-day moving average, and rolling over, down almost 3%. Goldman Sachs, man, way lower, like 273. I mean, you got a demand line coming. This is bearish consolidation, Chad. Okay, this is a bear market rally. All this going on, and what was it talking about? Now you have like the bear market rally, local higher highs than the previous highs, but all of a sudden then a lower high than the previous high. That's your tell. That's letting you know the conclusion of the bear market rally is unfolding. Right, confirmation of distribution locally. Look, you even saw it here. Like there are tells. This is the psychology of buyers and sellers. And now what's happening? Another lower high. Even less market participants involved in Goldman Sachs than just a few months ago. Way lower to go if you're patient. Hidden bearish divergence, undeniable. Mother of God. Are we cool, chat? This is an early stream. Bitcoin's trying to hold $28,800 as support. It's close, and it's just barely holding, man. I'm just wondering, win effing bids, dude. Win bids. Let's see here. Scrolling up, reading a little chat. Remember Sand? We were making fun of it yesterday. It's the bearish dragon, man. It was beautiful. Like, dude, this you just can't even make up how perfect it was technically. I mean, just like last year. I mean, the TA, the traditional technical analysis, just giving stuff away, and it was helping you either preserve your capital or to make money. What was beautiful about it? So you haven't broken the bad action magnet move quite yet on this one. I'm gonna have an alert set up if it does. 328 is your beep. Okay, PACW has made a resounding recovery. Mega recovery. Holy crap. Not really, but from the lows, okay. Still now up 30% and halted again, I believe. If it's not moving every 2 seconds, it's halted for the 15th time today, maybe. Shoot, dude. Sorry. Yeah, what a morning indeed. Everything's kind of calmed down, and I think maybe part 2 will be coming later today for the closing bell. But you can see MCB holding a critical support. 1576 was tested. There were limit buys set up there, and the limit buys came in. This asset up off its lows by 18%. Ooh, CMA, what a rally, man. Mother of God. As it was below support, rallied a good 13% off its lows. Okay, so some relief coming in intraday on most of these banks. So is the worst behind us, chat? Is everything good, man? Breakfast wheel spin. Oh, God. I want to vomit just thinking about that, man. Yeah, I mean, let's see. Oh, did we have, yeah, we had a couple of requests. I'm sorry, but Chris and I'm just not, we're really starting to get not so used to requests. There are just not many requests these days. And I think that a trend that will continue in the bear market. CDE, the Kang, man. Well, soon to be Kang. All right, what has occurred? Remember a couple days ago, it was discussed the controversy of a potential piercing line reversal. And now yesterday, a break back above a key level, 340. Please understand how big of a deal 340 is. Look left. That is everything. Okay, above 340 is potential promised land of $7+ in time. All right, well, if you're above that, now you're rallying, you're up 6.14%. And this is accumulation. Accumulation with the sell wall. And it all happened, this is like, one would be holding CDE quite possibly for a year to 2+ years. This is such a large structure. It could take so long to resolve, but the strength is coming in. The buyers are defending the 200 simple moving average as well, as you can see here with the piercing line and hidden bullish divergence. Yep, hidden bullish divergence. A continuation is implied on the daily on CDE. So for all its chop, still fine, still promising for way more upside in time. But again, in time, it could take so long, dude. We're talking about a 1,000+ day large harmonic. 1,000+ day harmonics can take about 1,000 days to play out. I know. Wow. The wall chart. Yeah, it's nuts, dude. So there's your CDE, Space Ape, and whoops, I should have looked at AG first. My bad. Gosh dang it. So you're good, and you're above support. Buyers are defending the support. Buyers are defending the 200-day moving average. There's a bullish edge implying continuation upwards. Another higher low. That is only good. Only good, okay, on CDE. Just got to be patient, man. All right, here's First Majestic Silver Corporation. That is pretty spectacular. I wish it would have been a higher low double bottom, but if you read about Bulkowski, I mean, he says lower low double bottoms can, like where the second low is lower, can have a better performance. So let's see if that's the case. I don't like the lower low double bottom just because you don't quite, there's no like accumulation argument yet like there is on CDE, but where you are, it's the basement. I think you're at the basement on AG. Anything above 650 is low risk. Below 650, he starts getting kind of sketchy. But dude, this is what dreams are made of, man. Right here, this is a wombo combo. Look, man, you have, I know, and it's just not been performing that great lately, but you're at the low risk entry levels still. Yep, you are. There's classic bullish divergence on the weekly on a slightly lower low. The slightly lower low just went to formally back test the 2007, 2008 highs. If that's not a dream for low risk and potential positive outcome, then I don't know what is. This is telling you that sellers are exhausted. You have a predictable historical pattern completed, and it's massive. Again, it's like a 1,000-day large harmonic type 2 return. This is it, man. This is the Scott Carney area. The Scott Carney area, man. Type 1, type 2 right there. Okay, and it's visible in the daily. So there's your AG. I know, man. It's just like win bids, win real bids. Anytime now, man. I don't know how long it'll take. This is the weekly. Liquidity is tight out there, right? Only finite amount of assets, but this is set up for higher prices. It just hasn't happened yet. Okay, there are your 2 requests, guys. There were no more requests. Yeah. Yeah, PacWest got destroyed this morning. It sure did. It's still been getting destroyed. It's been halted like 15 times now. It's down 51%. Here's your daily chart. No, I'm sorry. This is a weekly chart on PacWest. Don't think it'll make it to Monday. I think this thing will be halted. It'll be its last day of trading. Very well could be tomorrow. And that could be the case for multiple regional bank stocks. Okay. So the gains quickly being given up. But again, every time it gets unhalted, it is rehalted very fast. Currently, is it trading right now? Thought I just, yeah, it is. It's currently unhalted. Whew. And I'm paying attention. Like, dude, again, just because we're looking at banks doesn't mean like I'm not actively paying attention to Bitcoin's price. I have it right here, right in front of me. If it was doing something, we'd be on it right now. So it's just, all right. So let us look at an asset that is not a bank that has been absolutely destroyed. It would be Paramount Global. All right. They reported earnings today and they're dead. And it's destroyed. Absolutely nuked. This is from the low from the COVID crash to its high. This is an 88% retrace. And you're just whatever. That was 2089. You're just now testing the lows from January, and you'll soon break that, and you'll be going to 1021 for sure. Yeah. Got to really love the formal bearish back tests of inflection points, right? The sellers broke that price. The buyers came in to push it to test, to just conclude and make sure what was once a support is now resistance. Once that happened, those buyers that came in, they left. They sold. They said, okay, it's confirmed we're screwed, and you're screwed. And this TA is beautiful, man.
Hey Mitch, can you take a look at DWAC stock?
Yeah, we'll look at, and that's Trump's stock, right? I can't, or something. No, or yeah, maybe. Okay, thank you, dude. We'll look at it. Join the Discord. There's the link. Spamming it. It's pinned. Join the Discord or be destroyed. Thank you. I'm just showing you, man. We go the weekly on this so you can see it. This is Paramount. You have a 1021 target here, I think. 1021. So that means a lot more downside. You have like 37% downside on Paramount Global. Remember, they make movies. They make movies. Look at this. The low from 2006 is resistance. Confirmation that this is screwed. Okay. So what else is screwed? Unfortunately, Penn Gaming had earnings, and I think you're done. I don't think this is gonna hold now. Yeah, that's brutal, dude. Brutal. Yep. Looks like 1772 is very well the target. Okay. I mean, you're at like, unless a miraculous bids come in tomorrow, this is going to 1772 now. All the distribution and now supports ice lines manufactured in June of last year being breached. And that's a mega deal, man. That's like, oh, just 34% downside here. Look left, up, down, up, down, up, down, up. It's never not just gone straight down. If it actually begins to descend or ascend from 1770, it goes straight up. So yeah, you understand this, like part two, boogaloo of the 2022 bear trend. This is what's going on. The resumption of the downtrend seems like it is beginning to commence. Look at some of these assets. SunPower's down 8.5%. Oh yeah, it was screwed anyway. Look at the bearish back test. Oh my god. At free fall, and yeah, about to hit 1050 and then 768 after that, man. Look at the price action between these levels. You break support. Oh, and then you back test it. It's over. Short opportunity. Dream short opportunity at 15 bucks. So yeah, see you down another 30% downside on SunPower. It's solar, dude. Solar. Subsidized by the government. And they don't really make money. Okay, cool. Cool story, man. TripAdvisor. Remember TripAdvisor? They trip things and they have earnings, and then any sort of a argument for a bottom gets wiped out. Completely dead now. Yep, that's how it'll go, man. Hitting your lowest price since May of 2020. This is look at your bear chart. Look how beautiful this is. This is a beautiful chart. It really is. And if you break $14, oh my God. You break $14 on TripAdvisor, it's over. It's all-time lows. TripAdvisor is like 2 percentage points away from all-time lows. Let's have an alert set up. If we hear the beep on Trip, we know it's over. All right, here's Wells Fargo. Currently at its session lows. Down 5.67%. This is a mega bank. This is a too big to fail mega bank, chat. At its lows of the day, while regionals have been kind of, pulling back in the bullish regard, right? They've been rallying off their lows. That's not happening on Wells Fargo. Wells Fargo breaching supports. Major support break going on Wells Fargo right now. This is the 2006, 2007 highs. Just broke, chat. Okay, I don't know, this is serious. This is real life going on. Bearish abandoned baby, hidden bearish divergence. What more could you ask for? The most bearish indicators, stuff going on all together. $33.90 next target. After that, oh my God, $23. Bye-bye, Wells Fargo. Dude, we need to get some, should I flip the chart over? Would that get people more excited? Just inverse analysis of everything. Wells Fargo, man, its highest price, it's breaking a resistance right now, man. Just put in a higher low with hidden bullish divergence is above the 200-day moving average. It's so strong that the sellers couldn't even test the 200 again. It was so weak that the sellers were so weak that the buyers came in. Too much demand for the asset to even test the ice line again. So bullish abandoned baby, man, rallying so hard, positive momentum building. Is that better? Would y'all prefer that? Uptrend already established, man. Just impulsing upward. More excited or less excited, right there. Anyway, sorry. Back to reality. Qualcomm had earnings last night and got wrecked. Completely destroyed. Here, it was your bearish consolidation too. Remember? Higher highs locally, but then what? What, chat? I know it was earnings, but still, as we were discussing earlier, once those local higher lows, higher highs ends, when it concludes, that is the conclusion of the bear market rally. So this high right here that was lower than this high, that's the signal that momentum is shifting back into the hands of the bears, which already owned. They were in control of this chart. There is your Momo shift. 200-day moving average rejected as resistance. And then just, yesterday, look how awful it was. You had already broken the upsloping support. Then you back tested the upsloping support that was once support. It became resistance and then reversed and then earnings. And, it hit your lowest price today since November of 2022. And you do have big targets of like $89 to $94 down here, way lower. The bear trend. Hey. What's up, Chris? Thanks for watching, man. All that time. It's awesome, dude. Oh, and if you need people join the Discord, man, welcome y'all.
Appreciate the streams and work. Roll Tide 0.000269000 BTC.
So William, thanks for the 776, man, of BTC. Oh man, stacking those sats, dude. as Bitcoin still attempting to hold 28.8, but it's just at it. I mean, is it really holding if it's just sitting there? I don't know. Kind of. Not so much. Yeah. Remember Etsy? That was terrible, right? Identified terribleness, continuing that terrible with a new low, the lowest low of 2023 here. And this is what we're talking about. We're at a grade 886 for a reaction, but bear market rally stuff. Yeah, I'm probably going back down to 73.50 to go test that low again from 2019. It's Etsy, dude. It's Etsy. E-commerce for interesting. It's a cool website. I mean, really cool things on there, like customized stuff. That's where you go if you want like a. Hey man, I want like a Zelda shield 3D printed artwork on my wall. That you go to Etsy for that, something stupid. But or I want like Lord of the Rings like coasters, that are made out of wood. That's Etsy. Okay, cool website, but in a recession, I don't know how well it's gonna fare on the chart. GPS, yeah, suspicions, definitely. Yeah, and now it is, yeah, Gap might go bankrupt during this recession. Yeah. This asset is in a lot of trouble here, okay? You're already below the 2008 low. You're right now, as of today, cracking below the 2002 low. And it's serious because like you're breaking below the 1992 high today, where you can clearly see where the price goes after that, 428. That's the target. If this is real, really, really real bearish breakdown and there's fall through on Gap GPS, there's 49% downside on it. Bearish breakdown occurring right now. Good luck, GPS. I'm just gonna have an alert set up below that low from October or September. No, September 30th. Yep. That's when if you hear a beep on that, that's the lowest price since May of 2020. Stitch Fix, that is terrible. This thing is, it's another one of those e-commerce or e-services, and just going all-time lows, right? There's no place for a company like this in a recession with tight money, and no one wants to. An investor wouldn't own this, right? So once you break 270, we'll go with Fibonacci because that's all you got. Next target after 270 be 179 and 1272, and then that would be a 35% downside on Stitch Fix. Remember, it's at all-time lows now, so it will continue. Look how just how you have a double top, right? A literal double top at the 200-day simple moving average, and of course, the second high is lower than the first high. What? Confirming distribution. It's so bearish, man. Wow. Going back to USB real quick, it's down 5% now, and it's been rolling over more a little bit. I don't know, still below 28.50, which is a massive inflection point. Look, right there, USB from the COVID crash. Gotta love this, man. Oh my God, I'm so excited. So happy about this. Can someone please give me some from Marathon Petroleum Corporation, man. Bearish divergence, rising wedge, hits a global 1.618 fib extension. That nears it was near the apex. It was everything. It was the dream, man. Just TA respected.
Thanks for the
unbelievably.
Content, Mitch. Just want to show support, but how about a look at the Fannie Mae for a good laugh? Low risk entry, 0.000591559 BTC.
Colin, thanks for the 17 of BTC, man. Really appreciate it. Yeah. We shall look at that. Yeah, we'll have a laugh at Fannie Mae. Yeah, it's like FNMC or something. I can't remember. I remember I used to look at it many years ago, like long time ago. So this is what dreams are made of, man. This is almost an NFT, right? Almost an NFFing-T. Look at this, okay? You want to see it? You really want to see it? The chart. When MPC collapse, ? March 7th. Here's the chart. This is what it looked like before it went up one more time, one more like last 1.618, and actually hit the top of the wedge. And this is how they'll do it, man. They really try to sell as high as they can and to trap people to make them think it's going to continue higher. And then this is why like pattern identification is real, and pattern identification with context, with Fibonacci, very important. When there was also bearish divergence on this, so just a work of effing art, man. Okay, I'm gonna make a rising wedge short, and MPC is going to be the example. Okay. Whew. Stuff like that I don't get excited. Nothing will. Okay. Gosh dang, I love it, man. Super pleased. And the XLE, it was like literally the top was called, right? We called the top on this thing. It's and you would talk about, oh, MPC already broke its rising wedge. Well, look here, Larry. Look here.
Is this your homework, Larry?
Classic distribution below the 200-day moving average. You hit an 886 from the 2014 high before the oil glut, but this $91 level is the 2008 peak where the asset rallied, pumped, and then dumped. That was the reversal of the 2008, of the conclusion, the buying climax, and then the blow off top crash. And now you've confirmed that's resistance, not once, twice, thrice. And now think about it like this. This is how you know energy's effed. The whole energy sector's done, because now the buyers have attempted to push the price to test $91 again, but there are not nearly enough of them anymore. That is a major tell, okay? That is why it's important to understand what highs and lows mean in the right context. That concludes. Everyone out there, not like big smart money, understands that, and that's why you think it's done. The entire cycle is over for energy based on all this up here, okay? You'll see. Just like we saw in Marathon, I mean, show you the chart before and after. Wait, give it a month or two on XLE and see how much lower we are. No, I haven't had my coffee break yet. I will. Sorry, I'm just trying to figure it out, man. Yeah, maybe it's time to get that coffee. Let's see, it's 12:14 Eastern time. If you're enjoying the live stream, hit that like button, that bell, that sub. Thanks for being here as we watch the great bear market of our time unfold. Or recommence, you could say, because we've been in the long-term bear market. It kind of exactly began when the feds banned themselves from trading stocks. People at the Federal Reserve. And when the Bogdanovs died, that signaled the top. And that was, in late 2021, just like Bitcoin and crypto. And that has been ongoing ever since. But in October of last year, the index funds bottomed out to begin the bear market rally. But now that bear market rally is concluding 7 months later, 6-7 months later. And it's being catalyzed by a regional banking crisis that is now beginning to bleed into all the other sectors. You can tell. So Baron.
Sup Mitch, can you check
Yeah, I did the
Mexican
Qs.
peso to US dollar weekly tie?
We will. Here are the Qs again. This is what it looks like. It's beautiful. Okay, it's literally a work of art, and the context is beautiful, right? We're in a long established downtrend on the Qs, and you've gone through this multi-month long bear market rally. It seems like it's beginning to conclude at the deepest value perceived areas for short sellers. For the people that are in control of the market, you're at value areas. So who's in control of the market? Not buyers, because lower highs, lower lows consecutively for a long time. Okay, well, that hasn't changed. Again, these type of rallies occur to induce buying from stupid money to supply the smart money with exit liquidity, right? If they want to sell, there has to be a buyer. So they draw out these rallies this long to create complacency for stupid money that don't know what rising wedges are, that don't know what 886 retraces are, that don't know what buyer exhaustion is, bearish divergence. They don't know this stuff. So even if it kept going higher, it's going to be based on one asset called Apple that blew out earnings, and then they summoned, the Bogdanovs from the grave to pump the asset after hours. I mean, that's the only thing left that would save someone. And even if it happened, and you could rally to $330 and you're still contained within the rising wedge. So like there could still be, like we just saw on Marathon, like how it just kept kind of testing and up thrusting through the top of the rising wedge before then collapsing. Yeah, that can happen too. And that's really like you're up there, and that would really get dumb money to be like, oh, I'm missing out. It's going to keep going. And it's like you're at the absolute dumbest area to ever go long. It doesn't matter if it goes up or down. We just know this is the highest risk area for long. Yeah, flip the chart. Yeah, you flip that chart. That's unbelievably bullish. Holy crap. Bullish divergence and a prevailing uptrend. And you're at value perceived areas for longs. You flipped it. Okay. So someone said something about it. Let me, SQQQ, like what's the point, man? Like it's just going to be like, there's decay on it. Look, man, there's decay. It doesn't, yeah, it's at the all-time low. Get it? The all-time low because of decay. And it's like a day trader's tool. It's not really like, there's no rising wedge here. But yeah, like maybe if you looked at it, can't remember what that was. Let's see. There's bullish divergence. Yeah, on the MACD histogram and the RSI. So there's bullish divergence at a nice line. Okay, well, there's a little argument there, like a little bit of an argument for upside. But again, I'm not really interested in doing TA on levered ETNs, exchange traded notes, because they have decay, and so that decay kind of screws the charts up, and it's like that. That's why it always goes down, because you won't win holding this long term. Your gains, any gains you make, will just get wiped out holding it too long. So again, I would look at the QQQ, and then if you wanted to use the SQQQ as a vehicle to go short on the Qs, by all means. But this is how you would analyze the underlying asset to use the SQQQ if you want to be levered, okay? Or one could just buy puts, or one goes naked short with a stop loss. That's also another way to do it. But there you go, man. Yeah, to be an SQQQ holder is to be a loser. I'm saying you can hold it intraday, a couple days here, but no more than that if you really care about, making money. All right, let's look at that other request, okay? Yeah, Bitcoin is currently holding 28,800 still. I mean, it's above it on the 60-minute, as you can see right here on the quad screen. There it is. Nice, we're above it, man, for now. But barely. But that's okay. And the dragon on Ethereum is still certainly valid. No problems. Rectangle XRP, just sideways garbage. Oh, God, it's just a terrible asset. I mean, like, cool if you believe in it fundamentally and you're part of a cult, that's great, man. But dude, technically, this chart sucks because it's not even about the pattern it's presenting. You know the consensus here. The thesis is 80 cents, but you could be 84 years old by the time it gets there. Bitcoin could be at 100K, and then XRP finally maybe makes it 80 cents, right? But and then BNB still this price contraction near a mega breakout. 350 equals like 430 if you could ever break it, but there's just too much supply up there. But at the same time of being like there just being too much supply at 350, there still seems like there's a lot of demand. People keep constantly buying and putting in higher lows, so it's pretty neutral locally. What's up, Brian?
Hi Mitch. Could you look at Abdurrahman, please?
Yep, UA. We'll look at it. Thank you, dude. But we must look at DWAC for Jason. I think that was up next. Yep, DWAC. Sorry, it's a little late. Digital World Acquisition Group. Oh God. Oh God. Yep. Well, last time I looked at it, I guess was like maybe in November or something. Oh my God, that was awesome. It like rounded out and just collapsed, and lower high, then lower low, then lower highs, then lower lows, then lower highs, and soon to be, you guessed it, lower lows. It's a loser, financial conglomerate. Got bad news for you. It never makes money, ever. In fact, it just keeps losing more and more money. So, like I've been saying, any asset that doesn't make money in these market conditions, and when the chart looks so technically garbage, you would just immediately hit the space bar. You would not spend any more time looking at the asset. It's at all-time lows. There's just no reason to own it ever. I don't care if it rallies. That's not TA. That's not real TA. Real TA is risk management on at least somewhat quality assets. And the technical arguments there, but then in these market conditions being so terrible, you want to maybe make sure that the asset maybe makes $1, at least $1 per quarter, right? This one loses lots of money. So no thanks, man. I did TA on it way back in August, and it was awful. Barely TA. It was just a joke, man. Like garbage. All time. There's a gap at $10. So that's your target here. You have a target of $10 to fill a gap. Okay, October 2021. That's it. All right. Next one was Fannie Mae, FNME, right? FNM. Was it C? I can't remember. Fannie. Let me just type it. It's been a minute, man. Like a year. FNMA. That's it. That's it. Yeah. Oh, I still have the data from a long time ago. There was this falling wedge, okay, that hit this ice line. And then there was bullish divergence, and it went insane and hit targets and everything, but then hits this mega supply line, up thrust through it, then back tests the up thrust, then crashes back to the ice line again, and then rallies and tests the supply. It's beautiful, like the way that T had been respected. Sell orders at the supply line. Wow. And now just dead, just heading on down to 1876, which is virtually the all-time lows. That's where you're headed next. Okay. Yep, below the 200-day moving average. So you've got about, it could take months, but you've got about 55% downside on FNMA. That's right, MGX, exactly. Okay, man, that's your Fannie Mae. It is a joke, and that's why he requested it for a laugh, and I'm laughing so hard. It was so funny, I forgot to laugh. I'm laughing on the inside, okay. Mexican peso hype. I don't really like the moaning of the lady. Oh. There's time and place for women moaning, and it's not at 12:26 Eastern on a technical analysis live stream, okay? So don't think I don't approve of women moaning. It's just not for music on stream, okay? So Mexican peso, you know, the channel, the uptrend been going on, nearing the top of it, it seems like. It's got this supply line, a lot of touches. Just skating on up, man. Still in this, you know, bottomed out really hard at that back test in November 2021. It's just been around. And like, I think just yesterday, the Mexican peso hit its highest level since September of 2017. So the Mexican peso is in an uptrend, and it's hitting multi-year highs just yesterday. And even today, hit those multi-year highs again. So the target, though, I mean, you're at a peak, you're at a high from 2018 and a high from 2016. So if market participants can take the price above that, then your next level would be 0.05701, and it's just like one peak at a time, really. So definitely might be a little exhausted here, but man, the trend is so good right now. So what you know about uptrends, right? An asset, it's in a channel like this. Anytime it's near the top of the channel, it isn't considered overbought. And if the asset falls to the middle, the midpoint, which is the heart line, that would be considered fair value in the uptrend. And then the bottom trend line, which is the demand line, signifies oversold in the uptrend. So, I mean, if you were wanting to try to long any asset in an uptrend, you're always looking to buy it oversold, right? Not versus overbought, attempting a rally, and you're just rivaling the high from early March. So it's not exactly like some sort of low risk entry area for a trade right now, but that's what's going on, right? You're technically kind of starting to get overbought in an uptrend. Okay. Nice stuff, man. All these supply lines are broken. Higher highs, higher lows. It is uptrending. Mucho gusto. Mucho gusto indeed. All right. So that was Mexican peso. And the next one was for Under Armour. Well, no, the next one was for Brian Murphy, but he wanted Under Armour. We could look at the Brian Murphy chart for Under Armour. I guess we could do that. Yeah, pretty bad. Pretty awful here. I get it. I understand you might have requested it because, hey man, we're at the basement. We've already crashed, but you've already had a reflexive rally that concluded what was once a support from 2017, what was once a resistance from May of 2020, even a resistance from May of 2022, is now virtually resistance again, rejected. And so a sell-off has occurred, and you've sold off all the way back down to the next kind of inflection zone between 650 and 680, and you kind of rallied again, but like, just like, I don't know. I mean, like maybe it holds 725 here, but it's just some weak price action, man. You made all-time lows in November, and now you're just bleeding out. I would wait till at least 684 to 650, you know, like wait for that and then maybe reassess when it gets there. But you know what that means? That means like there's still, to just see the next levels of support that are real, there's 10 to 16% downside just to test the level. That's so much downside. So I would look at this and be like, I get it. It's a shark, maybe 100% shark. The type 1, maybe type 2 is coming, but again, you'd be down 16%, and then maybe the type 2 occurs at 640, 650. So Look, man, the trend is certainly bearish. Lower highs, lower lows. Lower highs, lower lows. It's bad, man, right? Just plenty of charts out there that are not making lower highs, lower lows forever. WAL's pumping now. Oh, yeah, the bank's recovering, man, aren't they? Maybe. Yeah, PACW is only down 46.8%. Yep. Banks are pumping for sure. CMA is only down 8% now. You know, caught those bids way off that 28.30 low at 32.62 now. Yeah, WAL. The bids are coming in, man. Well, they're all at lunch, right? And all the people on Wall Street, they're at lunch eating cocaine sandwiches right now, so just wait. But yeah, what a colossal rally. Dude, oh my God, WAL is up 88.99% right now off the lows. Jesus. Wow. Crazy. This is the casino though, man. Like this is what happens in the past 4 hours. See the hourly. Yeah, look at that crap, man. Yeah, all these halts are doing this. Like this thing's been halted probably as many times as PACW has been halted today. This can cause this stuff, man. Wow, man. Yeah, I heard about that. Yeah. So we've been live now 2 hours. So if you're enjoying the stream, the like button, the bell, sub, thanks for being here. Super early stream. I haven't had an early stream like this in a long, long time. Been years. Yeah, everything now cooling off, right? Not near as bad as it was earlier. And you wonder, like, will the sell-off recommence this afternoon once lunch concludes? You just don't know. I mean, I just don't, like, PACW, like, how do they not go to zero, you know? Wondering, do I close my puts today or wait till tomorrow and then just hope that, like, it does exactly what FRC does, and it is not seized until this weekend. So we get one more trading day, one more massive, nasty drawdown, you know, because it'll just collapse further. We can go back to Bitcoin for a moment if you're so inclined. All the cryptos are down today. Monero only up. Q&T and Monero, the only ones really up today. I mean, like non-joke scam Pepe coins, okay, not on, you know, not real charts. Here's your Bitcoin on the 60-minute. I don't know. I'm just looking at. Wow, man, is that classic accumulation now? Third low is back testing support, resistance, and support. Man, that'd be crazy, wouldn't it? I mean, it's still, look, dude. I mean, you scale out and you see it. It's the higher low show. I know, like, a lower high, but still, just because you make lower highs doesn't mean jack until you start making lower lows. So Bitcoin's in a pretty interesting spot here for sure, where it just seemed like you're counting it out yesterday because it's just breaking the support resistance and rallying it and back testing it as resistance before selling off, and you think, oh, it's done for, and then the banks are really starting to collapse more and more, and then inverse correlation on Bitcoin showing strength and rallying, and is now above a key level we need it to desperately be above. But yeah, you can definitely see 60-minute bearish divergence right there, right? From one high to the second high, lower levels on the max histogram. So I wonder, would that play out? I mean, it wouldn't play out if there are too many buyers defending 28.8 long enough. What is my thumbnail? What's my thumbnail? Oh, yeah, people are mad because the thumbnail says Bitcoin pump. Well, yesterday it was. That's yesterday's thumbnail, actually. This is what I'm using. So, apologies about that. But if you're coming in here talking crap about the thumbnail, or you're mad at me for that thumbnail, you're out of your mind. You're crazy. Like, that's what you're going to be mad about? That thumbnail saying Bitcoin pumping, very small letters. Bro, that's crazy. Like, when there are people with like their mouths open and like saying Bitcoin 100K on their thumbnails, you can come in and complain about one thumbnail out of like 5,000 that say Bitcoin pumping and it's not actually really pumping. Yeah, banks going insolvent, but my thumbnail. So dumb, dude. Angelo, no one gives two craps about what your opinion is. You get me, Angelo? No one cares in here. 0 people care. But thanks for making it public. Yeah, your silver has elevated up 0.48% today. Yeah. Oh, this is gold. I'm on gold. Sorry, I meant to go to silver. Yep, silver, nice rally going on. Yep, 26.18 is upon us. If you break this level upon us, massive markup. Silver target about 14% upside on silver if you break $26, okay? That's it. And some really nice hidden bullish divergence someone could make an argument for. Yep, silver, ready to go, man. Yep. Yep, you win, dude. And now you can't chat ever again. Good luck. Yeah, so the metals, what about platinum? Platinum just not doing the same. It's precious, but not as, it's not like the one ring precious like gold and silver now. It's just a standard, it's just kind of precious. Okay, it's not something that would make Gollum lose his mind. He'd like it, but meh. He wouldn't, you know, it would not extend his life for 500 years. There's the Discord. Edge on silver a little bit, but again, we've already talked about gold and silver where you don't even need to worry about the charts so much. Well, the monthly chart is what gives one conviction to own physical gold and silver because it's such a slow time scale, but it's also so significant, and the monthly implying on gold and silver that you're going way higher, but it might take 6 months to 2 years for a complete resolution, and maybe even longer. Do we have any more requests? I don't think so. I'm about to end stream. It was like, whatever. Okay, no more requests. And yeah, things are just dead in here anyway, man. I don't know. It's done. Like, it's okay, man. I'm just like, I don't know, going live early. So like, what's the, not much of a point, man. All right, so we looked at the charts. You're kind of, you know, hopefully you gain some more clarity into what's going on. But I'll just be back No idea when. Till next time, respect the TA.